Right now, Supreme Court is doing a hearing on waiving of interest on interest paid by the borrowers.
So the statement is little complicated. So let us start from the beginning.
So what does a moratorium mean? A person, say X, has taken a loan amount of 1 crore rupees. For suppose a bank is charging him a nominal rate of interest of 9%. So the EMI comes down to be 90,521 rupees per month. For example, if the person says that due to COVID-19 situation, he is unable to pay the interest amount of 90,521 rupees, he has taken a time lapse of 1 month. That means he has taken a moratorium of 1 month. In that case, he has to pay the bank an extra amount of 75,000, which is called as interest on interest.
And when we are seeing the entire situation in the perspective of a borrower, definitely this 75,000 comes as a very big amount if you are not paying a monthly installment of around 90,521 rupees. But let us see here in the perspective of a bank. So as per the example given previously, the person has taken 1 crore rupees of loan, which accounts for around 90,521 rupees EMI per month. Now the bank who has given 1 crore rupees to this person as a loan, is it the bank's money? Definitely no, because somebody has given this money to the banks and bank is lending to some other person. And who are the person who has given this money to the bank? These are definitely the depositors. We as depositors puts our money into the bank and bank then lend that money to somebody else. Now in this case, the borrower is taking privilege that he cannot pay this 90,521 rupees of EMI because he has been hit by the pandemic. But can the bank ask to the depositors that I cannot give you interest right now on your deposits because the bank has been hit by the pandemic? And let us take a very different situation from here. While the pandemic has affected everybody, so in this case, suppose both the borrower and the depositor has been hit by the pandemic. So here the borrower is saying, right now I'm not in a good position to pay you back my EMI. While simultaneously the depositor is also saying, I'm not in a good position, so I want my money back. So even the depositor is asking his savings to withdraw. So what bank will do? It is not getting money from the borrowers. Simultaneously, depositor is asking money to withdraw. And right now, bank will go to the market and raise money in additional interest and give it to the depositors. And for this case, even bank will give interest on interest for that particular amount.
For example, if the court has given relaxation of interest on interest, that means the borrowers did not pay the said amount of 75,000 rupees, an extra amount, but in reality, nothing comes for free. So who is going to bear that burden?
Is it the bank who will cut from its profit and compensate to the borrowers? But will the investors of the bank will allow the bank to lose its profit, or is it the depositors who will get lower rate of interest for the deposits that they have made? So for example, earlier you were getting an interest of around 7% for your fixed deposit. Now you will be getting lower interest rate ranging from around 5 to 6 or around 6.5%, because the model of the bank works like it earns a higher interest from the borrowers, pass it on something for this profit to the bank, and give it rest interest to the depositors.
If the bank is waiving off the interest or interest paid by the borrower, it will be creating a direct impact on the depositors.
And if you'll see the general categorization of the borrower and the depositors, who are these borrowers?
Generally, a borrower can be a person who is well settled and can easily take the loan and can pay it easily. If you see into the categorization of the depositors, a depositor can be a person who is a low income person or a retired person. Basically depends upon the interest being generated from the bank. When we are telling that borrower is being affected from the pandemic, similarly the depositor is also being affected from the pandemic.
And if you'll see the recent RBI's restructuring plan, it is for 2 years. That means suppose a person is opting for a moratorium for 2 years. That means for 2 years, it doesn't cost him anything if he defer his regular EMI payment. So even if the person does have money to pay its EMI, he will not pay his EMI. He will put it some of the FDs or mutual fund and earn interest out of it. And what about the time value of money?
Now suppose I'm giving an amount of 1 lakh rupees, and in that 1 lakh rupees you're going to buy a gold of 20 grams. But with that 1 lakh, can you be able to buy that same amount of gold after 2 years? So the value of 1 lakh today is not equal to the value of 1 lakh after 2 years.
And in the end, I would just say that we are definitely not denying the fact that the borrowers are in stress. Neither we are denying that in this condition they should be helped. But we are objecting the means of help to the borrower at the cost of the bank and the depositors. And what if the banks fail? In a very recent time, we had seen two major banks, that is the PMC and Yes Bank. They have failed because of the borrowers, and who has suffered? The depositors. And during that time, RBI has come as a rescue for the depositors. And today, RBI stands in court in favor of the depositors against the borrower. I hope the court do listen to the most credible institution in the country of finance. So friends, this entire analysis was based on a report by a CNBC TV 18 journalist, Lata Venkatesh. So first of all, thanks to her for providing a relevant content, and thanks for watching, and do subscribe the channel.